So the dollar stores.
They are actually doing well. So in contrast to Best Buy, you're seeing their shares really spike this morning on strong results from both Dollar General and Dollar Tree. Dollar Tree, of course, has had all of those issues with its Family Dollar acquisition. It looks like they're taking steps to put that behind them. Pretty strong same-store sales out of the Family Dollar branch in this quarter. And so that's great to see. And then both companies raising their guidance for the full year.
Concerns about tariffs and trade?
So that is interesting to me. So Dollar General says that all of the tariffs are factored into their guidance so far for the year, but that also assumes that they're going to be able to mitigate and offset the impact of the tariffs, which then raises questions for me about, does that mean price increases? And when you start raising prices, how does the consumer ultimately respond to that? So I did think it was interesting. They raised their same-store sales guidance for the year, but they're looking for like low to mid 3% range, which would imply a slowdown in the back half of the year, in the third and fourth quarters, from the 4% that we saw in the second quarter.
How lean are these guys in relation to, if they wanted to offset it in different ways, it would be through cost cuts?
So they don't have a lot of cushion here because most of what they sell is lower margin consumables. It's a lot of food and groceries and sort of basic household goods that don't give you a lot of profit margin to begin with. Now, Dollar General has been pushing more into home goods, party goods to try to bolster their margins. So you could maybe see some price increases there. But of course, they're trying to launch this and draw in the consumer to buy more of those products from Dollar General. So it's not really a great time to be raising prices if you're trying to actually get the customers in the door.
Did we see much pressure on their margins for either company?
Not so much in this quarter. Their earnings were actually pretty good, and so they did raise earnings guidance. Now, Dollar Tree had taken down their guidance in the first quarter, and now they're raising it back up a little bit here. They see about a $26 million increase in costs from the tariffs, so there is some pressure there, but relatively manageable in the grand scheme of things. I do think it's interesting that their results were so good because you did see numbers from Ollie's yesterday, which is another bargain outlet that really struggled, but it looks like a lot of that was self-inflicted.